Okay, let's try and unpack this. The whole world of, getting clothes from a designer's idea all the way into your closet, it's just incredibly complex.
Oh, absolutely.
We're talking global supply chains, dealing with economic shifts, geopolitical stuff, constant pressure to be fast, efficient. It's definitely more than just fabric and sewing machines.
It really is. The apparel supply chain, it's this like intricate dance. Logistics, manufacturing, tech, finance, and yeah, increasingly environmental responsibility too. Companies in this space, they have to be so agile.
Especially when the economy gets shaky.
Exactly, to survive and, well, thrive.
And today, we're taking a deep dive into one company that's right in the middle of this, Lever Style Corporation. We're using their 2023 and 2024 annual reports as our guide here.
That's right. Our whole mission today is to go through these sources. I mean, it's over 100 pages of their own reporting, pull out the really important bits, and help you understand what's actually been going on.
Yeah, their performance, their strategy, how they're run, their approach to social and environmental issues, straight from them.
Straight from the source.
So think of this as your shortcut, really, to getting informed about this particular slice of a huge industry. Let's jump right into how they handled the recent economic challenges.
Sounds good. So the reports, they definitely set the scene. 2023 was tough globally, and the apparel sector felt it. You had high interest rates, inflation, energy costs, geopolitical risks, and a big one. Retailers were just swamped with excess inventory from post-pandemic times.
Right, a really difficult backdrop for anyone selling clothes.
Yeah.
And yeah, in that context, the reports confirm Leverstyle's revenue did dip a bit in 2023, down 4.0% to U.S. $208.5 million from U.S. $217.2 million the year before, which seems, well, understandable given the market.
It does. But okay, here's where it gets really interesting and frankly, quite impressive. Despite that sales dip, their net profit actually grew.
Grew, okay.
Yeah, expanded by 7.6%, hit a record US $15.6 million, which was up from US $14.5 million in 2022.
Okay, hang on. How do you actually grow profit when revenue is shrinking? That doesn't just, happen.
No, it absolutely doesn't. The reports, they point to really effective expense and cost management. That was key. But the biggest factor they call out, a huge drop in finance costs.
Finance costs, like interest payments.
Exactly. They fell from about US $1.3 million in 2022, way down to just US $6.2 million in 2023.
Wow, okay, that's a massive difference. How do they manage that?
Well, it really boils down to their financial strength. The company ended 2023 completely debt-free.
Debt-free, right?
And they were holding a pretty significant net cash position, US $18.1 million. That was actually up from US $12.8 million in 2022. And that cash buffer, it represented almost 33.8% to be exact, their net asset value.
So being debt-free just slashed their interest payments, boosting the bottom line even with lower sales. That cash wasn't just a safety net, it was like a real strategic edge when interest rates were climbing.
Precisely.
But how did they handle the revenue dip itself? I mean, was it just cutting costs, or did they do something specific to keep customers on board?
Well, the reports indicate they really leaned into their competitive strengths. Things like maintaining high customer service, offering short lead times, and providing high mix, low volume production.
High mix, low volume, so smaller, more varied orders.
Exactly. Those kinds of solutions are gold for retailers trying to manage their own inventory issues and react fast to market changes without committing to massive orders.
So while maybe others were struggling with big bulk orders, Lever Style was nimble enough to handle diverse, smaller batches quickly. Is that the idea?
That's exactly it. By focusing on that agility and service, they navigated the market downturn better. And the report suggests, in some cases, they even improved their share of wallet, getting more business from existing customers because they offered what others couldn't.
That really shows how, operational skill can directly translate into financial toughness. Okay, so now looking at 2024, the reports show things turning around on the revenue side.
Yes, revenue bounced back. It increased to US $222.9 million, up from that US $208.5 million in 2023. And this positive trend, well, it naturally boosted their financial health metrics.
Like what?
Well, their net current assets went up to US $57.3 million in 2024 compared to US $47.9 million in 2023.
And I saw the current ratio improve too, from 2.4 times in 2023 to a pretty healthy 2.8 times in 2024.
Right. And that ratio, It's a key indicator of short-term financial health. How easily can they cover immediate debts? A higher number like 2.8, that's generally a strong signal of liquidity.
Makes sense.
They also mention having available banking facilities of US $79.1 million. They state this provides enough working capital for them.
There's an interesting little detail in the 2024 report about customers. It notes a second customer, just called Customer B, contributed over 10% of their revenue.
Yeah, that's worth noting. It could mean they had significant growth with one specific big client, or maybe it points to a bit more diversification among their top customers. Reducing reliance on just one main account could be positive either way.
So pulling this together, what do these reports tell us about Lever Style's recent performance? It looks like resilience, right? Using financial muscle and operational smarts to grow profit in a tough year, and then getting revenue growing again, partly by focusing on what their customers really needed.
Exactly. And moving beyond just the recent past, the reports also really detail their forward-looking strategy. And it's pretty ambitious.
Yeah, they're very clear about wanting to accelerate their acquisition strategy in 2024 and 2025. They're obviously planning to use that healthy cash balance we talked about.
Right. Their main targets seem to be in the outdoor and active apparel segment that's a growing market. But they're also looking at other fashion companies, ones that could boost their product knowledge, give them more scale, or expand their production geography.
So it sounds like they're using that cash, not just defensively, but pretty aggressively, to build out their capabilities and reach. And then, tied into that, there's this big digital ambition.
Oh, yeah. They actually state a goal of becoming the Uber of apparel supply chain.
The Uber of apparel. That's a bold statement.
It is, through digitalization and platformization.
Okay, what does that actually mean in practice? What steps are they taking towards that, according to these reports?
Well, the reports mention some concrete steps. They've finished building their data warehouse. That's kind of the foundation for doing real-time analysis and automation across their, very complex operations.
Right, the digital plumbing.
Exactly. And they've also developed their own automated fabric booking system, a proprietary one, and they've implemented a CRM system, customer relationship management, to handle client interactions better.
So they're building the infrastructure. This whole strategy part makes it really clear. They're not just thinking about the day-to-day. They're aiming to fundamentally change how they operate and where they sit in the market long-term, using deals to grow and tech to transform the process itself.
Which brings us nicely to looking kind of behind the scenes, how the company is structured and run, governance and operations.
Okay, so Lever Style, they listed on the Hong Kong Stock Exchange back in late 2019. And the reports, they emphasize sticking to strong corporate governance, following the CG Code guidelines.
Yeah, the structure looks pretty standard for a listed company. You've got the board, led by the chairman, then 3 key committees: audit, overseeing financials and risk; nomination, handling director appointments; and remuneration, setting pay.
Directors have standard 3-year terms, retirement by rotation, that sort of thing. And they also stress continuous professional development for the directors, keeping them up to date on listing rules, governance codes.
One thing they explicitly highlight is having a board diversity policy. So when they nominate directors, they state they look at things like gender, age, cultural background, education, experience, trying to get a good mix on the board.
They also talk about having a risk management framework and internal controls. These get reviewed every year, and the board considers them effective, according to the reports.
And shareholder communication is covered too. They use the usual channels, meetings, reports, website, exchange filings to keep shareholders in the loop.
Operationally, they mention the success of their asset-light model again, which basically means they don't own the big factories themselves, right? They manage a network.
Correct. They manage contractors and suppliers. The reports also get into some accounting specifics, like how they value intangible assets, think customer lists, and check them for impairment.
Right.
Oh, and interestingly, the reports do note a significant increase in trade receivable write-offs in 2024.
Write-offs, meaning they had to accept they wouldn't collect on more customer debts that year compared to the previous one.
That's what it implies.
That's definitely a detail to notice, even with the revenue growth happening. Something to keep an eye on.
Absolutely. Now, moving beyond the financials and operations, the reports dedicate a good chunk of space to ESG, environmental, social, and governance.
Yeah, they clearly want to highlight their focus on sustainability and social responsibility. It's all laid out in their ESG report section.
And in terms of governance for ESG, they've set up a dedicated ESG committee reporting to the board, specifically to manage those related risks and controls.
Okay, and environmentally, what are they doing?
Well, they detail practices aimed at complying with environmental laws in the PRC, and they report no major noncompliance issues in 23 or 24. They also mention specific actions like using video conferencing to cut down on travel, installing water and energy-saving products in their offices.
And I guess it's worth remembering their asset-light model here, too.
Mm,
As a supply chain manager, their main operations aren't like heavy industry, right? They're not discharging tons of wastewater or air pollutants directly. Packaging, things like that, are done by their contractors.
that's a very fair point. But they do talk about their climate action commitments. They've signed the UN's Fashion for Global Climate Action Charter. They hold an ISO certification for tracking greenhouse gases. And importantly, they're accredited by the Science Based Targets Initiative, the SBTI.
SBTI, so their emissions targets are meant to align with climate science goals.
That's the idea. And on a much smaller scale, they even mention growing plants in the office area as a tangible thing.
Okay. And the social part of ESG, employees.
Yeah, the reports emphasize their commitment there. They have established policies for employment, safety, welfare, equal opportunities, career development, the whole suite. They also detail the kinds of training they offer, things like apparel trends, software skills, case studies, orientation for new hires.
And they give a snapshot of the workforce in the 2024
They
report.
do. 347 employees. And they break it down by gender, age group, and where they're located: Hong Kong, PRC, Vietnam, and then this others category, including Europe, America, Bangladesh, really shows the global footprint.
Right. What about product quality and safety?
Addressed as well. They have systems for packaging, delivery, tracking products that don't meet standards, handling rework or waste. And a key positive point they report: no product recalls for safety or health reasons in either 2023 or 2024.
That's definitely good news.
And finally, under community contribution, they mention supporting local communities, partnering with charities. They give specific examples like donations for students in need and providing materials for flood relief efforts in Guangxi.
So all these ESG details together, they paint a picture of their stated commitment to operating responsibly, looking beyond just the financial numbers.
And of course, behind all this, the reports, the strategies, are the people actually leading the company. The reports do highlight the key figures.
Mr. Esito Shiyan Stanley gets a prominent mention as the chairman. His background looks pretty deep in the industry, roles in associations, committees, even won awards like the EY Entrepreneur of the Year China. Seems very established.
Yes. And there was a change at the top, CEO-wise. Mr. Tan William took over effectively April 1st, 2024. The report notes he brings significant prior experience from the apparel and trading world, a fresh perspective there.
Okay.
And Mr. Liu Ming is also mentioned, wearing multiple hats as an executive director, the CFO, and the company secretary. Critical roles.
The reports also briefly touch on incentive schemes, which seem, pretty clearly designed to keep key people around and make sure management's interests line up with the company's long-term growth.
Right. The co-ownership share award scheme gets a specific mention. It's aimed at recognizing contributions, retaining talent, attracting new people. And the reports confirm that the trustee actually bought shares under the scheme in 2024.
Any mention of traditional stock options?
It's noted that the share option scheme had no options outstanding or exercised in 2024, so the focus seems more on that co-ownership scheme recently.
Okay, so seeing the leadership, the governance structure, these incentives, it gives you a clearer sense of the whole system they have in place for oversight and, well, driving the company forward.
We've certainly covered a lot of ground in this deep dive, from their financial toughness and growth path
Yeah.
to their pretty bold strategy with acquisitions and digital transformation,
Mm.
their structured approach to governance and ESG, and the key people involved.
We really have. And by pulling out these core insights from, quite lengthy annual reports, we hope we've given you a useful shortcut to understanding Lever Style Corporation.
And we heard that clear ambition, didn't we? To become the Uber of apparel supply chain, backed by real investment in tech and actively seeking acquisitions.
Which does leave you with a fascinating question to think about. What could a digitally driven, maybe more consolidated apparel supply chain, the kind companies like Lever Style are aiming for, what could that truly mean for the future? How might it change the way clothes get made and delivered across the globe? What disruptions or efficiencies might that bring? Definitely something to mull over.